Realty Income stands out in the real estate investment trust sector as the monthly dividend company, a title it has earned through 664 consecutive monthly dividend payments since 1969. Trading at $57 per share with a market capitalization of $52.72 billion and an enterprise value of $81.34 billion. This S&P 500 dividend aristocrat has maintained 21 consecutive years of dividend growth. The current annual dividend of $3.23 per share delivers a 5.66% yield, significantly higher than most income investments in today's market. With 922.59 million shares outstanding and institutional ownership at 78.96%, this REIT commands serious attention from professional investors worldwide. Realty Income operates a net lease REIT business model, owning over 15,600 properties across retail, industrial, and commercial sectors, with tenants handling property taxes, insurance, and maintenance. In Q3 2025, the company invested $1.4 billion at a 7% weighted average initial cash yield, bringing year-to-date investments to $3.9 billion and raising full-year guidance to $5.5 billion. The portfolio maintains an impressive 98.7% occupancy rate, with a rent recapture rate of 103.5% on re-leased properties, demonstrating strong tenant demand and pricing power. Revenue for the trailing 12 months reached $5.61 billion with gross profit of $5.20 billion, reflecting the company's 92.57% gross margin efficiency. European expansion continues with significant presence in Spain and the UK, diversifying geographic risk while capturing higher yield opportunities. Traditional earnings metrics don't tell the full story for REITs due to depreciation distortions, which is why investors focus on specialized ratios. Realty Income's Price-to-FFO ratio of 13.60 indicates the market values each dollar of funds from operations at $13.60, while the forward PE of 37.29 and PEG ratio of 5.94 suggest moderate growth expectations ahead. The company's EV to EBITDA multiple of 16.10 and EV to sales of 14.49 place it in premium territory relative to some peers, reflecting quality and stability. With a beta of 0.81, this stock moves 19% less than the broader market, offering defensive characteristics during volatility, a key attraction for risk-averse income investors. Analysts maintain a hold consensus rating with an average price target of $61.85, implying 8.24% upside potential from current levels. The balance sheet shows $424.27 million in cash against $29.04 billion in total debt, resulting in a net debt position of negative $28.62 billion and a debt-to-EBITDA ratio of 5.75 times. While the debt-to-equity ratio of 0.74 and current ratio of 1.36 indicate manageable leverage, the real story lies in cash generation, operating cash flow of $3.76 billion, supports dividend payments comfortably. The controversial 300.25% payout ratio misleads because it's based on GAAP net income of $962, $12 million, which includes non-cash depreciation charges. The real measure, AFFO payout ratio, sits around 75%, well within sustainable range for REITs, with an effective tax rate of just 7.94% and consistent 2.93%. Year-over-year dividend growth. Management demonstrates commitment to shareholder returns. Despite its massive asset base, Realty Income employs only 468 people, generating an extraordinary $12.00 million in revenue per employee and $2.06 million in profits per employee. Operating margin stands at 45.16%, with EBITDA margin reaching 89.98%. Showcasing the capital-efficient nature of the net lease model. However, returns on equity, 2.49%, assets, 2.27%, and invested capital, 2.37%, appear low due to the asset-heavy, leverage-dependent REIT structure, where returns distribute to shareholders via dividends rather than retained earnings. The company's interest coverage ratio of 2.27x provides adequate cushion on debt service, though rising interest rates remain a key risk factor given the debt load. Asset turnover of 0.08 reflects the real estate business model where value comes from stable income rather than rapid asset turnover. The stock has experienced a modest negative 0.54% decline over the past 52 weeks, trading near its 200-day moving average of $57.45 and below the 50-day average of $58.56, indicating recent consolidation. Short interest stands at 44.11 million shares, 4.78% of shares outstanding, up from 38.43 million the previous month, suggesting growing bearish sentiment among traders. The short ratio of 8.80 days to cover indicates it would take nearly 9 trading days for shorts to exit their positions at average volume. Key risks include interest rate sensitivity. As borrowing costs rise, both REIT profitability and relative yield attractiveness decline. Share dilution presents another concern, with outstanding shares increasing 62% year-over-year and 1.27% quarter-over-quarter as the company raises equity capital for acquisitions. The Piotrowski F-score of 4 suggests moderate financial strength, neither exceptionally strong nor weak. Realty Income suits conservative income investors seeking monthly cash flow with lower volatility than the broader market. The 0.81 beta makes it a defensive portfolio holding during economic uncertainty, while the 5.66% yield provides substantial income in a low-rate environment. This is not a growth or momentum play. Earnings per share of $1.07 and the modest 13.63% 5-year EPS growth. Forecast indicates steady but unspectacular capital appreciation potential. The ex-dividend date of November 28, 2025 means investors must own shares before this date to receive the upcoming monthly payment. With analysts projecting $61.85 as a fair value target, current pricing around $57 offers a reasonable entry point for long-term dividend collectors. The buyback yield of negative 8.62% and overall shareholder yield of negative 2.96% reflect the company's growth through acquisition strategy rather than share repurchases. For investors prioritizing monthly income, inflation protection through lease escalations, and portfolio stability over rapid growth, Realty Income merits serious consideration at current valuations. This video is for educational and informational purposes only and does not constitute financial, investment, or professional advice. The content presented is based on publicly available data and personal analysis of Realty Income Corporation, O, and should not be considered a recommendation to buy, sell, or hold any securities. All investments carry risk, including potential loss of principal. Past performance does not guarantee future results. The stock market is subject to volatility, and individual stock performance may vary significantly. I am not a registered financial advisor, investment advisor, or broker-dealer. Always conduct your own research and consult with a qualified financial professional before making any investment decisions based on your personal financial situation, risk tolerance, and investment objectives. While efforts have been made to ensure accuracy, I make no guarantees regarding the completeness, accuracy, or timeliness of the information presented. Market conditions, company fundamentals, and stock prices change constantly. By watching this video, you acknowledge that any investment decisions you make are your sole responsibility. I am not liable for any losses, damages, or consequences resulting from actions taken based on this content. Stock prices fluctuate due to market conditions, economic factors, interest rate changes, and company-specific events. REITs, like Realty Income, carry additional risks, including interest rate sensitivity, property market conditions, and leverage risks.